So 29 points down for today's session. More shares traded than what we saw coming through on Friday. 29 million shares valued at around 152 million shillings from around 4.7 million shares that we posted last Friday. We're starting to see a little bit more activity from a volume perspective coming through today. And one of the reasons is foreigners seem to be stepping back into the market.
Yes, it's true. Foreigners have been very busy today. We've seen them account for about 3/4 of market turnover. Of particular interest to them was Safaricom, because Safaricom accounted for about 68% of total foreign investor turnover and about slightly over 50% of total NSE turnover. So foreigners are taking trading positions on the counter.
Would you say that this position that we've started to see coming through from the foreigners, something that we experienced last year and the year before the competitive environment started changing rapidly, do you think that it can be sustained through 2012?
I think it can be sustained, particularly on, specifically on Safaricom, because last month we saw results coming out on from the CCK, which is the Communications Commission of Kenya, showing statistics on market share. And unlike what most people expected, what analysts expected, Safaricom still did better than expectations in terms of their hold on the market share they had the previous month.
Let's touch on Mumia Sugar. We also had that stock out with results last week. Some say a very disappointing performance for the first half, where we saw revenues declining around 5.4% year on year. Earnings per share, however, for the period rising 5.4% year on year. We know that much lower sugar production is the reason that we saw a decline in revenue. What are your sentiments with regards to the stock? Do you also feel disappointed with the numbers?
Yes, it's a disappointing performance, but I think it's also relatively good in terms of, if we were to consider the operating environment at the time. We have high operating costs, something that the company did well to contain, and also the administrative and marketing expenses, which ideally are the easiest for them to control, that are responsible for the better than expected results.
Let's just touch on that operating profit margin. We saw that coming through at 67.5% year-on-year rise. We saw income rising within that regard, and then we also saw a decline in marketing and distribution costs. That was down around 57%. Do you think that these operating margins can be sustained going forward? And obviously, such a huge decline in marketing obviously is a sign of the times, a company trying to pull back on various cost structures.
Okay, it's difficult for them to sustain it because there's also the issue of the competitive environment, meaning if they are to reduce their marketing expenses, they'll fall victim to their competitors. But again, we need to look also at the other lines of business. They have the water bottling, they have the energy, but we really need to look at the other lines of business before we can get a real picture of the business in totality.
Let's also touch on Kenya Airways, of course, preparing for the rights issue, and of course looking at the likes of Uganda and Tanzania as well. What is your sense? Do you think that this is the right move for Kenya Airways?
Okay, looking at their strategy going into the future, they need to look at sources of funding. But again, it might have come at the wrong time, considering also the company didn't have good results. The last results they issued were below par, and this could affect the uptake of the share going into the rights issue.
Just looking at the bond markets, as Kenyan Central Bank is to sell a 12-year infrastructure bond and a 1-year T-bond for the total of around 20 billion shillings. This is the amount of money that we can see coming through in the month of February. Do you think that there is going to be a very good uptake with regards to the bonds worth around $239 million?
I think the market is ready for these bonds, and looking at liquidity over the recent weeks, the uptake should be good. Something else we also have to, CBK has to balance between the market sentiment and also their funding needs. So they're trying to find a balance, and I think issuing a 1-year and a 12-year is actually good for the market. Yeah. And we should see an oversubscription
Yes, of course, and we know the central bank is actually marketing to the diaspora, so it'll be interesting to see how that plays out. On that note, we have to say goodbye. Thank you so very much, Renaldo D'souza, Research and Investment Analyst at Genghis Capital.